stacking my coin, stacking my coin. Bitcoin, Litecoin.
It's your boy Crypto Blood, and welcome to a new series. I'm calling it Ask the Block. Basically, I'm curating questions from you guys from my YouTube channel. All you got to do is hashtag AskCB, and I'll cue that question up, and we'll go at it like that. I'm taking the first 6 questions today. We're going to start off doing it weekly and go from there, possibly start live sessions as well. We'll see how this goes, but welcome and thank you for joining me. And so today we're going to be taking the first 6 questions. I'm trying to keep it crypto related for right now, but I think a couple of the questions that I got in were not directly crypto related, but we're going to do them anyway. So let's get right into it. The first question is from my man Algos out there on YouTube. He asks, you've mentioned your past history as a creator of Algos. Can you talk more in depth about your tech history and what skills would one need to work in the tech world to create trading algorithms? So you don't really need to be in the tech world to create algorithms. You really need to be more of have a stronger mathematic and statistical and programming background over anything else. I started trading about 10-11 years ago at this point. I didn't start off trading with algorithms. I didn't create any algorithms initially. I was just trying to figure out how to trade manually. And really, that's what you have to become first a good manual TA or technical analysis trader, because you need to be able to understand how to develop trading systems in your brain and do it manually. You know what I mean? Analog style. It has to be, because you got to understand how systems work. You got to understand the nature of trading systems. You have drawdowns. You have to model your trading systems to mitigate those drawdowns as much as possible. When I mean by drawdowns, I mean you'll have periods where your account will trade. You'll basically hit a losing streak. And so those losing streaks, you try to weed those out of your system, whatever your system is. So many people probably think trading systems means you're doing it all automatically. No, your trading system is whatever set of criteria you pick to give you an entry and exit point, right? So if I'm just going to use something real simple. If the simple moving average crosses on, like a 20 simple moving average crosses a 100 moving average, then that means you're going long, right? And then vice versa. If it crosses downward, then you're going short. I mean, that's a very simple way of describing what a trading system is, but it's basically a set of criteria that you stick to every time. So with trading and creating algorithms, though, you got to understand statistics. You got to understand probability, because it sounds like that would be easy for you to just translate that into some code, but it really isn't. It's harder to do that than it sounds, because when you're talking about a set of code or instructions that are going to trade every time the same way, now you're talking about no thinking. There's no AI involved in this. It's just repetition and stacking the odds in your favor over time. So you got to have an understanding of statistical analysis, and you got to have a programming background. But most importantly, you have to know you got to understand how trading systems work, the nature of trading systems. There is no holy grail trading system that's going to give you guaranteed profits all the time. If those systems exist, they are held close. Okay, that's a money machine right there for real. So you're not going to know about those, but you can still make money with a trading system that's only right 40% of the time, 30% of the time. It's all about managing your losses. So if you keep your losses small and capitalize on your big wins, then you're going to make money over time. It's going to be a profitable trading system. So I started to get back to your question though, Gooch, I started trading or creating algorithms in MetaTrader 4. Many of you know that from the Forex game. I started there, tried honing my skills. The issue with MetaTrader, what I found over time is that the data that I'm using to back test. So when you build an algorithm, you build it, right? And then you run it backwards. Many issues that I found with MetaTrader is that the data wasn't consistent. It would load, it would just change. Like the historical data would not be consistent, so you'll get varying results from running a back test. The same system, you run it a couple of times, you get different results. And I'm not going to get into the details of why that happens. Has to do with retracing and the granularity of the data. It's not that great. Even when I imported in, external data, not pulling it from the server, from some of these brokerage houses, it still was inconsistent. So building algorithms in MetaTrader was a very hard task. But moving forward to when I found TradingView, their Pine script language, their system is much better, it's more reliable as far as the data. So I use that now, and overall much better success with algorithms in TradingView than I do with or did with MetaTrader. Last year did very well, over 300%, but 2019 was horrible starting out the gate. From January all the way to July, June, July, it was horrible. Took back over 60% of my gains from 2018. And the reason is because we had no volatility. So think about this. You've got an algorithm, right? And you got a set of criteria that lets you know to go long, to go short, or whatever. Well, if the markets are going sideways, and I mean it was dead in the water in early 2019 from January to July. Whatever number of indicators you use, I use a kind of complicated, I wouldn't say very complicated, because there are some guys out there, some quant guys that are really pushing the envelope on, trading and getting signals and knowing when to go long and short and all of that. But fairly sophisticated technique that I use to develop my algorithms. But those algorithms, they're going to give you false signals. They're going to go long, go short. If the market is flat, it's going to keep going back and forth. So when you trade going back and forth, you're losing because first, commission. If I'm not making money, even if I get out at the same price I got in, I'm still losing money because of the spread, the commission. So those are the things. That's why I can't say there's a holy grail for any trading system, because markets change and you have to just capitalize on when you do have volatility and price action, meaning, you get a good swing up and down and it's just not sitting still or low volume. That was another issue in early 2019. We barely had volume. So when there's lack of liquidity and volume, you really see the whales manipulate the markets, because they can see where everyone's orders are, and because there's no liquidity, they can really move the market up and down really quickly to do stop loss hunting, and knock people out of the market. So yeah, that's kind of my whole thing with trading algorithms, creating it. You got to have a pretty good programming background. You got to have a statistical background, understand how to manage and assess statistical data and trends and probabilities, all that good stuff. And lastly, and the most important thing, you've got to know how to trade. You've got to know how to develop trading systems manually or on an analog level. So it's a lot, man. It's a lot that goes into that. The three main components being a strong trading background, a strong programming background, and a strong background in statistics and analyzing stats and stuff like that. So I hope I answered that for you, El Gooch. Let's get into the second one, and this one is from my man Aircoins Lee out there on YouTube. He said, "It's happened to all of us, so tell us a story of a time you've been wrecked in crypto." I bet it was not selling Litecoin at the top. That's funny. Man, I mean, I was wrecked back in 2015, 14. you know, when we went through the bear market in 2014, because you got to think I made a lot of money from 2000, early 2013, late 12, all the way the first, you know, well, that was like probably the second or third bull run, but the first one I had experienced in cryptos. So I made a lot of money, and what I did was reinvest that capital into building or creating mining rigs. So I started with my rig I built myself. I built it from scratch. It was for mining Litecoin. Surprisingly enough, you mentioned Litecoin. So I did very well, made my money back hands over fist, like many times over. But I took that money, and then I ended up, because the ASIC game, ASICs are like hardware devices that are specific to one task. ASICs are just not for mining crypto. ASICs have been around for many years doing various mathematical calculations or things for maybe like an engineer firm or manufacturing, whatever it is. It's a circuitry built specifically for one task. So ASIC started coming out for mining cryptos and mining, more specifically, mining script algorithms. Because at that point, we all thought that it was impossible to build an ASIC for script algorithms. That was the whole point of script. Because, you know, with Bitcoin at that time, ASICs were already, you know, mining on the SHA-256 algorithm, and so script was coming along to keep ASICs out of the game and primarily focus on or allow only GPU miners to mine. And that, theoretically, at that point, the thinking was that it will keep the mining distribution level. Everyone has a graphics card, so you know that would keep things kind of leveled, because even today we still see this, and it happened way back then. Mining was concentrated, it was centralized, and it is today still. And I can't really show you guys the website because it's down right now, but are we decentralized yet? You know, Bitcoin is still centralized. There are like 3 or 4 main entities that mine 50 to 51% of the hashing power of the network. So at any time, if they collude together, it could be a problem. It could be a lot of double spending going on, though, you know, we would see that and make adjustments as a community most likely, but damage would have already been done. But anyway, that's what ASICs were doing. They were making it very concentrated because, of course, out of China, they were creating the circuits and they were getting first dibs on mining. So they would mine for many months with these new, very efficient boards, and then they would sell them to the market. But anyway, I invested a lot of money in ASICs for script consensus algorithm coins like Litecoin. There were many back then, but Litecoin was the major one. Dogecoin. And I invested a lot of money, in thousands and thousands of dollars, into these boxes. I was getting them from Gall miners back then. Those who know what I'm talking about, Gall miners. I was getting them from somewhere else as well. And actually, I'm going to show you guys. It's sitting right here in my studio. One of my mining rigs. Quite naturally is red. This thing is heavy as hell. So, this is one of my rigs, people. As you can see, it's heavy. Gall miners, the Falcon. So I have like 4 or 5 of these somewhere, but this one I just brought out once to show you guys. But yeah, that thing is that's an ASIC. It was doing a lot of hash power for basically the power output. That's what ASICs, they help with that. But anyway, when the markets crashed, it became very unprofitable to mine, and so I took a big L on those. That's one for sure. And then also, again, part of mining, I took a huge L in 2017 Going into 18, man, God, I spent even more money on some mining contracts that I thought at the time when I purchased them. I won't say the amount in US dollars, but if I had purchased those same contracts at the end of 2017, those mining contracts would have been worth like $300,000. So I purchased them in 2018, middle of 18, at a very steep discount. Man, the numbers were going to be great. I was going to be making a lot of money a month. And those, man, we hit that downturn and never recovered from that. And man, I lost a lot of money with that as well. So both of those stories come from mining. From coins, I mean, I've lost here and there, of course. We all have. I'm trying to think of any coins back in the day that I lost on big time. I mean, I lost on coins that just didn't go anywhere or crashed from the bear markets of 2014 into 15. You know, it was just dead in the water. And it got so bad in that period that many of us didn't even check our cryptos for a very long time. You know, like a year, 8 months. It was just dead in the water. We thought it was over. And we started to rise again in 16. And that went into 17. And, you know, yeah, man, that is definitely a story. Those two stories, both mining related, where I took a big L. Next question, Tech Geek asks, what mic and headphones do you use or recommend for your videos? Well, this mic is I think Yeti. I don't know it's a Yeti, but it's by Blue. It's a Blue mic. Blue make very good mics. When I used to rap and produce and stuff, there was a Blue mic that was like $1,400 back then. But this mic, I don't know, it was like 100 or something. As far as headphones, you can use pretty much any headphones because you're not doing studio quality work when you're recording. You just need something where you can isolate the sound. These are JBLs, I believe. The headphones, not as important. The mic, I think you should have a good mic, and get you a popper too. This helps with P's when you say, you know, when you don't hear that pop in it. So it should protect it from those pops when you're talking. So yeah, that's a good question though. Next question from my man Mick. He says, with all the phone wallets out there, which is the best and safest to have? Phone wallets, wow, man, back in the day, the only wallet that was in the Play Store was this one. I can't even remember. I have to bring out one of my old phones, but it was so unsecure, people. Yeah, it was crazy. But that wallet, I don't know if the same person, I don't think so. It was a different developer that basically used the same source code and created one for Litecoin, created one for a number of coins back then. But nowadays, I use Atomic Wallet even on the mobile. That's pretty good. None of them are going to be fully safe. You know, your safest route is to go for is like a Trezor or one of those actual hardware wallets that will, you know, give you a couple of layers of protection. But Atomic Wallet is one I use on the mobile. Has this swap function right in it, so you can swap between coins if you need to. You don't have to send coins to an exchange or whatnot. So I would suggest, man, the Atomic Wallet. It's a pretty good one. But safe, no mobile wallet is going to be safe because you have that inherent risk. You may lose your phone, right? And so if you don't have your passphrase, seed phrase backed up and all of that in a secure way, that has to be done in a secure way as well, then you may run the risk of losing your funds or your funds being stolen. Next question we've got from my man Me. He said, hey CB, what are your favorite indicators on TradingView to use when trading alts? Also, what will you be trading besides cryptos in 2020? Good question, Me. I think I don't use indicators, bro. I do not use indicators. All I use, and I have a trading course that explains how to trade with no indicators. It is actually the best way to trade, and what it does is it forces you to be patient and wait for the market to come to you. Indicators are normally what's called lagging indicators. So that means that it's reacting to the price movement of an asset after the fact. So it's giving you the go signal, if you want to call it, after something happens. So that means if something changes in the direction, then you're going to get the signal to go the other way late. Okay? Or even if you're going long, you're going to get it late. And what happens is indicators give you a false sense of security. So it makes you think that, oh, the cross or whatever indicators, the MACD cross below this, oh, it's time to buy. It helps. It can help, but is not. If you take your strategy, and that's what I'm saying, this is the great thing about algorithms, because you can take your strategy, make it into a program, and back test it. You can paper trade as well. You can back test manually, but it's much quicker to do it with a program, a programmed version of your trading system. So you can see all the times that it gives you false signals, because most of these indicators are going to give you a whole bunch of false signals. If that were the case, then everyone would be using it. And if everyone used that certain indicator, then it wouldn't work anymore. So you have to have an edge, right? If you don't have an edge in the market, then it won't work for you. So just think about that. If there's an indicator that you think that just is 100% right or 80% right, I'm sure most other traders know about that indicator as well. And that's the good thing about algorithms, is that I'm able to bring in, let's just say, I'm just going to say, put out a number, 100 different indicators, merge them together, and figure out those little minute inconsistencies where I'm seeing price change versus the algorithms or the indicators merging at a certain point. So you wouldn't be able to do that with your eyes, right? If you had 100 different indicators on your screen, it will take you forever to figure out if this one lined up with this one and all the checks are there. So again, the best way to manually trade is to use no indicator. I know it sounds crazy, and I'm not saying that, you know, moving averages don't help, but they give you so many false signals. It may work that one time or that second time or third time, but if you take that same, whatever you use to say I'm gonna go long here, if you program that and back test it, you'll see how wrong it is, right? So I hope that helps you. No indicators from me, homie. Also, he asks, what am I trading besides cryptos in 2020? I think I'm gonna get into options trading, equities. I've never been an options guy. I should have been. The only options I ever really traded were FX options, and those were bull spreads and binary options, not traditional American options. So that's something I think I'm going to try to pick up on in 2020. Next question we have my man Better Days. He says, where to get Bitcoin without using a Coinbase, Kraken, a non-KYC platform? Good question. I think I actually talked about this, or I know for sure I tweeted. One place is an extension, a Chrome extension called Squirrel, and I'm gonna pull it up right now. If you go to telosfoundation.io/downloads, you'll see the Telos wallets that they recommend, but the one I want you to look at is Squirrel. That's SQRL. You're able to, right from there with a debit card or credit card, purchase, I think, $250 a day in cryptos. So check them out. You can buy Telos, you can buy EOS, I think you can buy Bitcoin. But Telos is a sister chain of EOS. Very good sister chain, to be honest with you. Their governance is straight. They've got that locked down. Because they're a smaller organization or network, they're able to pivot and make moves and do things way better than EOS can at this juncture. So I definitely suggest you guys support Telos and get some of those coins. They're going to be worth a lot, I think, in the near future. But that's pretty much it, ladies and gents. Thank you for joining me on this first episode of Ask the Block. Hope you enjoyed it. If you want to participate in the future, just drop me a question with the hashtag AskCB, and I'll add it to the queue. I'm gonna probably do 6 questions per episode, so be patient with me on that. All right, it's your boy Crypto Blood, and I'm out of here. Holla.
Litecoin, Bitcoin, Litecoin, Bitcoin, stacking my coin.